large tech giants, you know what I'm talking about, the FANG M stocks, they have led the recovery in the stock market. Is it justified, or is it a reason to believe we're in a bubble? I've got perspective coming up. My name is Mike Bernard. I am the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. If you're a daily watcher, welcome to my home office. I am home recovering from COVID. Thanks to my mentor and business partner, Kevin Korhorn, for filling in on the daily videos the past couple of days. I appreciate that. Been very thankful. Symptoms have been fairly mild, and I was cautious quickly, so to my knowledge have not spread it to anyone and staying isolated from the family. But I'm in my home office and I'm sort of a spectator in my own life. I get to see the kids walking by through the glass windows here and wave to them every once in a while. But been doing a lot of research, and I'm excited to be sharing some of those ideas with you, which I want to do right now. I mean, one of the things as the economy has been recovering has been the tech leadership. There's no doubt about it. Obviously, back when the economy shut down, these big tech companies, their stocks dropped quickly, but they rebounded even quicker. And they led the stock market rebound that we've seen since March. And there's been lots of people that are looking and saying, well, could we be in a bubble? Are we in a bubble? Here's some evidence of a bubble. And even I have looked and I've said, geez, it seems like every single day I see a chart that says, you know, this hasn't happened since 1999 or since the last bubble. And so the simple fact that technology has led the recovery and has outpaced so many other areas of the stock market, people look at that and say, see, this is a bubble. You can't trust it. Be very careful. What's the data show? Now, check out this. Look at this information. This is the year-over-year revenue change from some of the large tech giants compared to year-over-year revenue change for the entire S&P 500. Wall Street got it right. Wall Street got it right. We're going to talk about whether this means bubble moving forward, but at least right now we would say, no, this is not an indication of a bubble. Look at the year-over-year revenue change from Microsoft, even from Tesla, from Facebook. I mean, these companies rebounded and rebounded significantly. So therefore, this justified that their stock price has just taken off, and their stock price has led the recovery significantly up until the election for sure, but then still even leading so far in 2021. So when I look at this data, to me that suggests Wall Street got it right. Even though I was skeptical how quickly these companies were rebounding, their stock prices were rebounding, Wall Street got it right. The revenue change is significant when you compare that to the overall year-over-year revenue change of the S&P 500, which is negative. So these stock prices are justified, at least thus far, in their significant increase. Now, let me parlay that with the chart that I saw yesterday that I would definitely put in the category of this hasn't happened since 99 or this hasn't happened since the last bubble. So take a look at this. Obviously, these companies, these large tech companies, their stock has significantly outperformed the S&P 500. So if you take a look at this chart, what this is showing is the overall S&P 500 performance going back decades. Okay, so you can see, highs and lows and how it's moved. But then it also is charting the number of S&P 5 companies, or the percentage of S&P 500 companies that their stock price has outperformed the S&P 500, the overall index. And you can see when a smaller and smaller percentage of companies are outperforming the S&P 500, that tends to correlate to a high point in the stock market. Happened in 2000, happened even in 07, happened in previous highs right before big drops in the stock market as well. Let me say it differently. I found this chart fascinating. Let me say it differently. When the number of drivers of the overall S&P 500 performance reaches and becomes just a concentrated few, that tends to line up with near a high in the stock market. So how do I deduce? How would I reconcile these two charts, this information? Number one, the simple fact that technology has led the recovery to me does not indicate we are in a bubble. And if that's something you've been holding on to, that tech shouldn't have rebounded this quickly, I don't trust any of this, I'd be cautious. The numbers don't support that as of right now. It seems as though, I'm not justifying Tesla's share price rise, but I'm telling you that the year-over-year revenue growth from these companies, the quick rise in their stock price appears to be justified. But I would reconcile that with it's still time for caution, though. We have the significant amount of the gains of the S&P 500 are concentrated in just a handful of companies, and that lines up with previous highs in the market. Therefore, I would go back to some of the phrasing that we've shared before, and that is stand as close to the entrance as you are to the exit. Have a momentum strategy as opposed to just a buy and hold strategy. For us in our momentum strategy, we still have about half of our dynamic models in technology, because they are still very much leading. But compare that to a few months ago, and really since the recovery began, where we were all technology. And now in that momentum strategy, we've shifted, and we've got still about half in technology, but the other areas are value and emerging markets and small caps. So make sure that you've got a momentum strategy connected with your diversified long-term holding, because will tech continue to lead? Will the year-over-year revenue growth continue to march higher and higher as we go through this recovery? I hope so, and it seems like it could, right? But there's also indication here through this chart and several others that suggest we're starting to see some things. We are seeing some things that line up with previous highs. So expect volatility and be cautious. Work with your CFP on that. If you don't have a CFP on your team that's helping you with that type of strategy, you can always contact a CFP on my team. Find us online, korhorn.com, that's Korhorn with the K, or wisemoneyshow.com, or just send us an email, info@korhorn.com. All right, there you have it. Go out and take your next wise step in your financial life.